One of the big trades that we've seen over the last 2 decades has been what's been happening with the Japanese yen. In recent trade, we've seen levels not seen in 24 years, with that dollar rising against a weaker Japanese yen. We can take a look now at some of the technicals around this and possibly try and work out where we could be headed in the second half of 2022. For this now, let's now go to one of our regular guests here on IGTV. It's Ron William from RW Advisory. Ron, welcome. It's good to be able to catch up with you again. I'm not sure when we last spoke about this dollar yen trade, but we've seen a lot of activity on the upside over the last few months, pushing higher and higher still, with these 24-year highs now we got for dollar against the Japanese yen. I'm really keen to hear what you have to say and what technicals you set up to give us an idea about how we should be positioned. What's your message?
Potential contrarian play ahead with high probability technical, macro, and just general setups. And not least because the yen has been in free fall liquidation, nearly 20% down year to date, becoming one of the worst performing currencies across its developed G10 peers. So as you just said at the intro there, having fallen to 24-year extremes as well, the big question is how much further can it go? And my analysis is suggesting that a turning point is ahead.
Well, let's take a look at our first chart and bring up a live chart for dollar yen, just to highlight this move that we've got up here. This only goes back a matter of a year or so, 18 months, but nonetheless, it gives this most recent rise as a set up to these 24-year highs. So let's start off on this live price as we are, 136.40 at the moment.
Yes, so 136.40, not far from 135, which was the actual 24-year historical extreme that we talk about. But just above that is what will likely be the Bill-Lendl level, and that is 140 psychological level. Now, we did go higher than that on dollar yen if you go back to the late 90s, and that further move higher can, of course, still happen if the trend continues. But there's a price and time confluence suggesting otherwise. On the chart that you have right now, what we have is critically price resistance at 135 with 140 ahead, but then also the momentum indicator showing an ongoing divergence, which I think was lasting for several months. Whether it's the MACD indicator or the RSI indicator, the divergence is strong and often a lead signal for a price reversal. Of course, we do need to wait for that price confirmation and avoid catching that falling knife too soon.
Yeah, let's move on to your first chart, because you highlight this, what you call this danger zone between 135 to 140, which is, as I said, pretty much where we are at the moment. Explain more about how important this sort of area is.
Yes, so it's always key to look at multiple time frames, particularly relating to your base time frame or trading investing. So in this case, I'm looking big picture, zooming out, in order to highlight where the big levels are and to better understand how the big reactions will take place. And so you can see here what I've called a price danger zone, which is the 135 to 140 area, 140 being key here and now, but also a kind of dynamic trend that I've drawn through the chart, which is not classical analysis, but it is certainly useful. And that also shows a confluence of different price measures all coming in at the same time. And that just increases the probability of overhead pressure and a potential turning point ahead.
What about some of the longer term cycles? You talk quite often about cycles and how you can interpret what's happened before as to where things might develop. What would you point me to in support of your argument if we use these longer term cycles?
Yeah, so timing is key both in life and markets across all different timeframes and all different assets. And particularly when there are big cycles in play, implying that the tide is likely changing. And on the following chart, we have Japanese yen futures based on CME data and a 7-year cycle in play. This was originally identified by Jake Bernstein of the Foundation Study of Cycles. And you can see here it implies a potential turning point into the end of this year, 2022, going into early 2023. So this is really the tidal wave changing soon. Of course, we do need to add some threshold for when that happens, but it does suggest a unique price and time confluence.
In terms of some of the events going back in history, where are we compared to some of the major events that have hit the Asian currencies generally, but more specifically the Japanese yen?
Well, we're on par in terms of the drawdown effect, which is down 20% on dollar yen, or if you switch it around, yen dollar in terms of yen weakness, year to date. So that is the worst performing drawdown that the yen has suffered this year. But when we look at it in comparison to past years, we can see that not only the drawdown effect, but the catching the falling knife proverbial scenario. And you can see there that it has happened before. 15 to 20% is the historical capitulation phase. And when it coincides with a big economic event, then it's even more meaningful. So we have on the chart there 2012 Abenomics, TMT, i.e. the tech boom crash of 2000, which bottomed into 2001. And then the Asian financial crisis of 98, which was much greater, of course, in terms of consequence and price drawdown, but where history is starting to rhyme in line with those events. So, of course, different stages of the cycle, different risk events, but the historical rhyme of the drawdown and maybe the potential contrarian play ahead is what we're studying here.
How about market sentiment at the moment? What is that pointing to? We see these 24-year highs still shadowing the current price action, but what's the sentiment looking like from here?
Well, this almighty big short is too short, according to a lot of the indicators we're looking at, both price, cycles, but also sentiment, and sentiment based on real positioning data, so where the real money flow is. And this is based on CFDs futures data, but you can look at it across different ways. It also appears on Bank of America fund manager surveys. Across the board, it's an overcrowded trade. And on this chart here, which is based on CFDs, net long short, you can see that we're not only below the zero line, but we're into the minus 100% level, where the trade is overcrowded, oversold. And I've labeled this the greater fool classic setup, where so many investors and traders are short that the last short position becomes the really final one, creating that vacuum where a meaner version set up and a catching and falling knife contrarian play actually works out. And if and when we wait for a confirmation of that potential reversal, then we can increase the probability of being more successful and winning that attractive reward to risk profile.
So let's take a look at the macro factors to watch out for. When looking at what's happening with the Japanese yen, it's nice to see what the context is. What charts are worth looking at in terms of giving us some further depth of analysis, which would help us on our trade on the yen?
Yeah, so big picture, top-down macro is key for exactly the reason you mentioned, the story, the context. And if we look at the three charts I've highlighted there, these are the key factors. So the first one is the other side of the coin, dollar performance and dollar weakness. Second is an unwind in the US 10-year yield, which has carried a positive correlation with the yen, partly because of a flight from the bond market in Japan on the back of yield curve control. And then the third and final is the energy market abating, crude oil as a case in point, that will relieve import cost pressures on the Japanese market and on their local currency. But if we go back to the original point on the dollar, which is going to be the biggest factor, we can see there figure one, showing that the dollar trend has been everyone's friend, and it has maybe fought a lot of the dollar bear headwinds. But it is starting to show signs of losing momentum, potential unwinding. And if we look for a move back to the 20-day, 50-day, and 200-day moving averages, I put the 50 and the 200-day on there as key trend measures. And most importantly, the pandemic peak, which is near around the 100 mark on dollar index. And then secondly, of course, the cycle chart. This is based on spectral analysis, i.e. statistical mathematical cycle prediction from the foundation study cycles. That is suggesting a down move for the dollar in the second half of this year, which would be positive for the yen and of course, other major currencies against the dollar, and would have an impact on various other macro trades. So that's the dollar factor, US 10-year yields, and crude oil energy. Quick word on crude oil energy. It failed to break above its peak highs despite the geopolitical tensions vis-a-vis Russia and Ukraine, and it is now breaking below its averages too.
Just one final interesting question I think has to be asked, and that is the relationship between market volatility and positioning around the Japanese yen. Is there a trade to be made there, or is there a connection to be made there between the two?
Yes, I mean, the yen has long been a safe haven FX proxy alongside its Swiss franc peer. But of course, it fell out of love in this record-breaking fall from grace with a 20% down year to date. But if we look at the 3-year correlation of the safe haven currencies, the dollar, the yen, and the Swiss franc against 1 month volatility return based on the VIX, we can see that the yen actually is top, second to the Swiss franc and then the dollar. So it remains a safe haven play, particularly if it renews strength as is likely according to the analysis that I just shared. And that will likely be alongside the Swiss franc. So I'm positioning and advising clients to do the same with a strong yen and Swiss franc, both in terms of performance, but also in terms of de-risking for the portfolio ahead of elevated volatility.
I wonder if I can just to go back to the dollar yen chart and go back once again to this longer term picture that we spoke about on the very first chart. I just wanted to ask a question about positioning on this, because obviously you're talking here about a weaker dollar position against the Japanese yen, a pullback in this chart. What's the sort of time frame are we talking about? You spoke there about longer term 7-year cycles and some of the positioning and the sentiment of the market. Is this trade likely to develop quickly, or is it going to be a slow grind down, do you think?
Time will tell in terms of the characteristics of the move, but I would say it's imminent in the sense that one could look for a trade right now with a good risk reward profile, building up positions, so not needing to go all in too early, particularly because it is catching a falling knife right now. So I would say first things first, wait for price confirmation, and that could appear either as a short-term consolidation or a V-shape mean reversion pattern. Wait for that to happen first if you're more conservative and you want further clear evidence of this reversal. Then start to average into that position and build your objectives accordingly. And then once we get that, it could really happen anytime. And certainly the technicals and the cycles suggest in the second half of this year. So if you notice on your chart there, Jeremy, we're already breaking below the 28-day average. That it's held for some of the time. I know there have been some exceptions there, but generally that's a good trigger level for short-term traders. I would say for intermediate to long-term horizon traders or investors, keep an eye on the 50-day average as your next level. And of course, some of the trend characteristics and key levels may be based on prior lows or Fibonacci levels. These will give better and more precise tactical overlays for the short dollar yen or long Japanese yen in general. And of course, keep in mind other proxies. So Aussie yen, Euro yen, and others that might also provide better risk rewards.
Yep. Okay, look, Ron, thanks so much indeed for catching up this interesting story with the potential of a reversal there for that dollar yen, and as Ron was saying, for other currencies against what is likely possibly to be a story of a stronger yen going into the back end of the year. Ron William there from RW Advisory. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.